this is the Trading Room. This is Rob Reinhold. I'm joined by Mr. Darren Fisher. And here we are, we're going into the third week of June. This means that this is monthly options expiry. And not only that, it is what's called quad witching. Quad witching, we're going to get 4 different futures and options contracts that are expiring. And typically in quad witching, we do get some volatility. So let's start off with what happened last week to get us ready for the upcoming week. As you can see here, the markets remained bullish. Not as bullish, and we saw a little bit of a broadening of a rally. Small caps that had been underperforming, they actually outperformed everything. It just was a move that just kind of kept going. We're going to take a look at the charts here. It wasn't a fantastic move. It wasn't a great move. It was just a grind higher. And Darren, last week, that's exactly what you said. You just see a grind higher. That's exactly what the markets did. One of the things I've been keeping an eye on is interest rates and the US dollar, and they were all very steady and didn't move much. Rates moved slightly higher on the week, dollar moved slightly lower, but this inactivity for dollars and rates really helps the stock market go higher because it's not putting any pressure on anyone. Once we get up to like 4% on a 10-year bond, it's going to start to put pressure on people to move their investments. But right here, we're just hanging out at 3.7% and have been here for a while. People feel very comfortable here with where rates are. And at the start of the week, we actually got an OPEC cut. Now, it wasn't specifically from OPEC, it was from Saudi Arabia, but it was a cut nonetheless. The oil market gapped higher over the weekend and sold off all week long, and oil actually closed negative for the week, if you can believe that. And then on the economic calendar, we just did not have a lot. We really only had one report of any importance. That was ISM services, and the number was bad. Now, this is one of the numbers that has been holding up really well. And it came out at basically 50.3, which is above 50 is growth, below 50 is contraction. So services that had been up in the 56, 57 area for a long time, we're now showing that we are right at no growth. This is what the Fed wanted to see. When I saw this number, I thought, okay, the Fed is not going to be able to raise rates with this number. That being said, we had other central banks around the world who were both saying the same things. They raised their rates by a quarter point. Bank of Canada did it, and the Reserve Bank of Australia did it. So we are going into this week with a Fed meeting, and there's about a 25% chance that the market thinks there's going to be an interest rate hike. Take a look at unemployment claims going up. So everything is there for the Fed to back off. The problem is inflation's not gone. It's just not gone. So let's jump into the numbers here of what happened last week, and let's really get on to next week, because this week is going to be a very big week. So the Dow was up 0.35%, S&P up about 0.5%. The Qs were flat on the week. They've had a monster run. Flat is pretty decent after the run they've had. As you can see, the small caps finally came along for the ride. Oil down 2% for the week. Gold flat. Let's jump into these charts here. We've been at a +3 since really back in this area. We were at +2 before that. We moved to a +3. And you can see here, take a look at this candle we got on Friday. We had a high base here for about 5 days. We broke out. That is about the wimpiest breakout candle that I've ever seen. Darren, what do you think about this breakout candle here?
As you and I were saying, Rob, it feels tired. I look at this. We opened slightly higher, about 0.2% higher. We tried to run up, and there was no follow through on it at all. And we came back to where we opened. And here's the thing, and we're going to see this in the sectors as well. This is one of those things where I've got nothing to go on. There is nothing in the near future that tells me that we should expect a pullback. But just looking at this base and this wimpiest of wimpy breakouts, it just feels like we're out of gas. And we say, don't trade your feelings, just trade the market in front of you. This is one of those very, very difficult times where you look at this and say, we didn't get a blow off top. We didn't get anything but that candle on Friday says there's nothing left in the tank to me. Now I can look. I will go out there and swear in a stack of Bibles. I could be completely wrong, and we could be up 2% on Monday. I fully recognize that. But looking at the market action today, it just said we're tired. That's what it told me.
And I will agree with you, Darren. The market does look a little tired here. I mean, and take a look at this, the cues here. So we had the run, the pullback, the massive run. I mean, this is a huge run in a very short amount of time. And it just can't move any higher. It's just tired, as you said. It's a great word to use. The market's tired here. Now, what that does not mean is that the market is about to have a big fall. It's just tired. It has to rest. Now, we talk about mean reversion all the time at Maverick. Mean reversion can be done in one of two ways. You can get a price reversion to where you actually have falling prices, or you can get a time reversion to the mean, where it just simply goes sideways. We think we're in this period of time where the markets have expended a lot of energy and probably just need to rest to gather some more energy. Whether that's going to be a pullback or a base, this is up for debate. And again, as Darren said, the market can do whatever it wants regardless of what our debate is. But the charts here are showing us that this is still very bullish price action. Yes, there may be a pullback coming. Yes, there may be a base coming. But ultimately, the prices are saying we're going higher after this little break we're likely to take here. And if we jump in and take a look at the VIX is telling you that no one's worried. There's no fear out there. There's no worry. And I know what people are going to start to think. Oh, people are getting complacent. The VIX is low. It's time to go. Okay, look. Yes, when the VIX is low, you can tend to get some really big moves the other way because people aren't positioned correctly. However, I've seen the VIX stay low for a year. And I've had all these people talk about the VIX is too low, the VIX is too low. And it stayed there for a year. They all lost their money trying to short the market as it kept going up. And then, yes, finally, we did get the break, and the VIX was the signal. But look, everything is telling me that this market is in a bull market. And in fact, and I talked about this Thursday on my end of day video, we had a story marking the end of the bear market. Now look, it's not a big deal. A bear market is when stocks go down 20%, when the S&P goes down 20%. The end of a bull market was simply when stocks went up 20% off the bottom. So it didn't mean anything. There's nothing we need to change. But theoretically, we are now in a bull market because it has gone up 20% from a certain period. Everything is saying the market is bullish here. So let's talk about this week. This week is going to be crucial. So we just went over the charts. We just went over last week. And here we are looking forward. If this was a regular week, I would be much more bullish. I would say, okay, the market might have a little pullback or a base, but I still want to be buying more bulls than bears. We need to look at this week because we have a very big announcement happening. Well, let's just jump into the calendar here because this is where all the action is. On Tuesday, we get CPI. So one day before the Fed meeting, we're going to have a good look into what the Fed is saying as far as inflation goes. It's supposed to be coming down. If you remember last June and July, inflation was rampant, red hot. It's going to cool down year over year, of course, but is it going to be enough to make the Fed back off? We do get that Fed meeting on Wednesday. They are not expected to raise rates. There is about a 27% chance the market is betting on a rate hike. Look, I don't think we get a rate hike, but I do think we get a Fed that is more hawkish than the market wants. Darren, what do you think about that?
This goes back to one of the things that we've been talking about really the entire year is does the Fed have a good, clear picture of what's going on in the economy? Because there's been a lot of misses to the upside on projections. There's been a lot of misses to the downside on projections. And I think privately, they realized that they were behind the power curve on inflation and transitory was not transitory. It became systemic. And I actually think it might be a knockdown drag out in that Fed meeting. But I think the actual chances of a rate hike are probably approaching 55, 60% rather than what the market is pricing in. So Wednesday is going to be a really interesting day. I'm just going to get some popcorn at 2 o'clock and sit and wait and watch. As I do not want to get in that dogfight. If the Fed does raise, it's going to throw everybody for a loop. I mean, you've got CPI on Tuesday. Is that really going to influence the actual meeting of the Fed? Probably not. They've probably got some advanced numbers that they're looking at right there. And the other thing they've got to take a look at is on Thursday, and this has to play into their minds. You got the Empire Manufacturing coming out, you got Philly Fed coming out, and you're looking at two wildly different stories. You get the forecast at negative 14.6 for the Empire State, but previously that was at negative 31. You got the forecast at negative 12.7 on the Philly Fed, and previously that was negative 10.4. So really, do they know what's going on in the economy? They would like to think they do, but we've been having these vacillating numbers to the upside, to the downside, and no economist, no professional economist, it looks like, or no consensus among the economists, I think it's a better way to put it, has been able to get a lock on these numbers. So I think the actual chance of a rate hike is probably double what the market's pricing at.
That's very interesting. I'm definitely going to be watching with some popcorn and a finger on the mouse button potentially. But let me give you my 2 cents cocktail talk of what I think is likely to happen here. The Fed, it's such an irony. The Fed is trying to, slow economies down. They're trying to cool asset prices. Here is one of the ironies is that when people start to have confidence in the Fed that they're doing it, what happens is the market rises. The fact that the stock market has risen so much over the past couple months kind of puts the pressure back on the Fed to rein in asset prices. It's the irony of the whole thing is that when they succeed and they do their job, it causes the stock market to get really happy and it causes them to have to do the things that the stock market doesn't like. I think they're in a situation where they are not going to raise, but I think they're going to be more hawkish than the market wants. And we are right at a point in this market. We have had a big run. And as I said earlier, if this was not a Fed week, I would be much more bullish on the week. But I do think that there is some risk this week. We've got quad witching, we got Fed, we've got, again, a little bit of an overextended market. I think we're a little susceptible. That being said, I am in no way, shape, or form bearish. I think any pullback should be bought. I am at a +3 on the chart outlook. And so if we do get a pullback, I think you buy the pullback. That is my cocktail talk for what I think is going to happen on Wednesday. Well, let's jump into some sectors.
Yeah, again, the sectors are telling us some really interesting stuff here. I mean, you look at the histogram right there. We had two that just went nowhere and one that went down. So, comm services, healthcare basically went nowhere. Tech was only down 0.5%. Now, here's the thing. The tech and the communication services are really what's driving the rise in the Qs. So if you get weakness in there, you're going to see the indices, that index in particular, drop down. But then you look at it, utilities had a really good week. That's a sector that doesn't move a whole lot, up at nearly 2%. Industrials are up 2.75. Consumers up about the same. And even though oil ended down 2%, the energy sector, ended up, almost up 2%. So we're getting a lot of froth. I can't even call this sector rotation. I just, I was looking at the sectors themselves, and they're going everywhere. It looks like either a seismometer or a heart attack when you take a look at these things in their totality. Just everything is going every which way. The markets, the sectors are saying we don't know which way to go. Now they're not going to go down, but you can see there's a few of them that have been leading this, that have been driving the price action of the Qs. Are they're flat. They're weakening. Now, are they just taking a breath? Are they just taking a pause? Very well, quite possibly. But there's some other stuff that's not been bought that is now catching a bid. Is it a gasp, or are we just taking a breather right here? Let's take a look at the individuals. Yeah, so last week I was in a -2 on utilities. I'm at a -1 right here. And normally my rules, and this is the thing that I don't like about markets like this, is I'm knowingly adjusting my rules just based on 1 or 2 candles. I don't like to do it, but I think I've been doing this long enough that I can see some sort of patterns emerge. Now, the reason I'm not at a 0 and I'm in a -1 is because this looks like a bear rally to me, just based on Friday's price action. Now, Wednesday looked really good. We just didn't, and we got a little bit of follow through on Thursday, but then Friday, it's yeah, we're going to give that back. So I'm at a -1 on utilities. This looks like it wants to roll back over. I could be proven wrong. I know it, but that's how I'm going to treat this. This right now to me looks like the weakest sector out there. Moving on to comm services. I was at a +3 last week. I'm at a +2 this week. I can't be bearish, not at all. I'm still above the 20. I'm still above the 50. We're just basing right here. Now you look at Friday's price action again. I mean, that mirrored basically what the S&P did. A very wimpy candle right there. But is that the start of a bull pullback? I can't say until I get a couple of confirmation candles. I just have to treat this as a high base. But right, where I was at +3 last week, I'm just a +2. I think we need to regain some energy before we try to make the next move higher. Real estate was at a 0 last week. I'm at a 0 this week. And again, I mean, this is the same thing with utilities. Well, why aren't you at a +1, Darren? And it's the same thing. This looks like we've just hit the top of that channel and we've rolled over. And we've got, kind of 2 days confirmation. Now we've got some lower shadows that said there was some buying, but we've got some, you still got those red candles that are sticking out there. To me, I think we go back between the 20 and the 50 moving averages and go back into that range. But right now, I just have to look at real estate and say, I think we hit the top, but I think we're going to be range bound, and that's we just have to play it sideways going forward, which is fine. We've got techniques to do that, but I'm not going to be overly bullish on real estate. Taking a look at industrials, this is one of the ones that looks good. I was at a +1 last week. I'm at a +2 this week. We've broken out above that channel decisively on Wednesday, and had to follow through on Thursday, and even Friday's candle. Look at that lower shadow on Friday. People were still trying to buy that up into the close. So do we base here? Probably, a nice little high base right here. But this is one of the ones that really got promoted to the bullish side from the previous week. And I'm happy to look at industrials and say, okay, what's looking good right now? What have been the high performers that are making that breakout right now or continuing to go up? And I think you can get a lot of good bulls in industrials. Looking at healthcare, last week we're at a -1. I'm at a 0 right now. It looks like Monday we wanted to roll over. Come Thursday, no, it was just a 2-day pullback after a monster run the previous week, and now we're just up there. I think we do go back into some sort of a channel right here. Probably between 130 and 132 is I think where the channel establishes itself right there. And if we can break above 132, then I mean that's retaking the 50 right there anyway. Then I would get much more bullish on healthcare. Looking at financials, finally had some movement of financials. I'm looking back at my notes here. I'd had financials at a 0 for the previous 3 weeks, and we broke out of that base. We did it on looks like Tuesday, and then we kind of stalled, but we didn't go back down. Okay, we barely touched the top of that channel with the shadows, and we're up there. But I think financials, right now is looking good. We'll see what the Fed does, but I think if things hold true to form, we could be mildly bullish on financials for the first time in about a month. Looking at consumer, +2. And again, this is the question. Why aren't we at a +3? It's Friday's candle. Friday's candle is why we're not at a +3. We tried to make the gains. We couldn't do it. At a red candle, even though we had a gain, we were up 0.5%. You look at that red candle and saying, oh, man, is this the end? It probably not. We're probably going to base right here. But, a candle like that, it's not a blow off, but it's one of those ones that you're just like, oh, man, we just look tired. So still the +2, a lot of good stuff in consumer. I just can't be a +3 just for Friday's candle. Looking at tech, at +2. And we've been at a +2 for tech for, looks like a month right here. We're just basing right here. Just basing. And you look at Friday's candle again. I know I sound like a broken record here, but that tech candle, that consumer, the communication services candle, they all look the same. It just looks like we're tired. Probably still going to base right here. I think there's some good stuff in tech right now, but I don't think we're going to see any explosive moves to the upside in a lot of stuff until we can, like you said, revert to the mean in time. I think that's where the tech wants to go right now. And I'm at a 0 on materials, and this kind of mirrors utilities, kind of mirrors real estate as well. It looks like we popped our head above the 50-period moving average, and then we pulled back. Did we roll over? Now, last week we had a really nice gap up, and you got to remember this is a whole sector. When the entire sector gaps up, there's some really good price movement right there. But again, it looks like this is just a bear rally at this point. I don't think we go back down to what we saw 2 weeks ago at the beginning of June. We're not going to go back down there, but I think you're being pinned, just about between the moving averages is probably a pretty good place to figure where basic materials go. So, just at a 0 right there, I think we go sideways. And exact same thing in energy. We had a nice move up. Really awful candle on Monday. Tuesday, Wednesday, we recovered that, very nicely. Then we rolled over again. I think, it's the same thing. We just stay, pinned between the 20 and the 50 for the next while. Let's, we just go sideways. I think that's where we go in a lot of things. So let's take a look at some potential. So to look at the whole sectors, right now, utilities looks to be the weakest at a -1. Energy, materials, real estate, healthcare, all at a 0. Financials mildly bullish at a +1, but then we've got the usual suspects: communication services, tech, and consumer all at a +2, and industrials move themselves up to a +2 as well. So but you remember, not too long ago, we had a bunch of stuff just pegged at a 0. So now we're seeing some more bifurcation among the market. That some sectors are in favor right now, and other sectors are just not getting any buying or selling pressure right now. So there's, if I had to describe this market in one word, it would be neurotic right now. I think that's probably the best way to put it. There's we don't have things spread from +1 to +3 with nothing at 0 or negative. We've got things that are spread all over the place. I mean, realistically, this looks like a shotgun pattern. Let's take a look at some potential trades. So last week, we were sideways in PLD, and this dropped down. I mean, it was looking good, on Thursday. We're at the lower end of our range right now. I think we got, 124, 125 was our, I think 125 was our center of our butterfly. So we're at the lower range right now. If we can get a bounce this next week, then I think, we become profitable. We're probably sitting at break even or a slight loss right now. I'm not worried about this. I think this one does. It's at the bottom of its channel right now, unless there's something that makes it break through. I think we do catch a bounce right here, and this is probably going to be a mildly profitable trade. Right now, we're looking at Peak Healthcare, symbols PEAK. We're looking at this one sideways to bearish. I mean, this mirrors a lot of stuff that happened in real estate. It looks like we had a really good run, then it turned into a bear rally. It just rolled right over. How I'm going to do this, I'm probably actually going to play the targeted butterfly, going out to July, that 18, 20, 22 butterfly. If it goes down here in the next 2-3 weeks and hits that 20, I'm going to take off half the position. So as long as it goes right there, once it's at 20, I'm going to take off the half the position. Then I'm going to let the rest of it run till expiration and go from there. So that's probably the best way I think to play that one with a targeted butterfly. Communication services. Last week we were long IPG, and this did perform for us very nicely. It was up 2.5%. It had that breakout on Wednesday, held it. It looks really good. So there's we've got some more time in this trade right now. So if you're holding onto the long calls, this looks to be pretty good. If you want to get rid of this, if you think it's stalled out, you want to just keep the time value on those long calls. Go ahead and sell it. I think this possibly the move is done. If let's take a look at Monday, Tuesday. If it continues to base and you've still got unhedged long calls, the run's over. Take the profit and go. Right now we're looking at Match.com. Nice high base. Had that breakout on Friday right there. So this is just barely. This is like the first candle that I would do. What I would do, how I'm going to play this one, I'm going to go out to July 7th, go long those 39s, and I'm going to short next Friday's 41s against it. So we're right there. I mean, you can go to the 42s would be a one that I would do right there. If this one wants to just drift up another 40 cents here in a week, then I think it's good. But I think this is one that you want to play with a diagonal right there. And healthcare. Last week we were short Amgen mildly. It was up 0.32%. But this one, look, even though it's up for the week, bear rally right there is what it says to me. So it says a little bit more time on it. I think this is a bear call spread. I'm happy to hold on to this one. Not worried about this one at all. Looking at Moderna, nice low base. Moderna broke through on Friday, and you can see it had that support right there. Straight, let's not get too cocky with this one. Let's just go out to June 30th. Do a 125 or 120, 125 bear call spread. I think that's the best way to play it right there. Just give it a few weeks and let it drift on down. I think bear calls, but the best way to do this.
All right, let's move into industrials. As Darren pointed out, this was really the only sector that got promoted higher, or actually, I guess financials did as well. Industrials and financials are actually my favorite two sectors in the market right now, as everything else that's been super hot is cooling off and basing. So I think industrials looks really good. Last week we had a play on Fastenal, and this one was a 50-55 diagonal call spread. So this is about the best as you can ask for in a diagonal call spread. Our max gain point was 55, and it basically closed right under that. I'm going to hold on to these long calls for next week. If I don't get a move earlier in the week, I'm going to go ahead and close these for a nice little gain. This week, let's take a look at Boeing. Now, Boeing has been in a really long base, and I actually had to go back and load more of the chart up just because I wanted everyone to see how long we've been in this base. So we've been in this base pretty much all year after a big run last fall. We're now looking at a 5-month base, and we are potentially breaking out. Now look, we had a couple times over here where it looked like it was going to break out. It didn't. So what I'm going to do is I'm going to play this with a short-term diagonal call spread. I'm going to open this up, and I'm going to do diagonal with 220. You could even do like a 225 if you wanted to get a little bit more. And what I want to do is I just want to kind of test drive this for a week. What I want to know is it going to hold above this resistance, or is it going to drop back down like it has all the times before? If it holds, I am going to just go to long calls and leave this all the way out till July, because I think this thing could really have a significant run. If it does fail like it did last time, I'm in a diagonal, and maybe I can get a break even or a small loss and bail on the trade, and it's just a 1-week trade, and that was it. So I really like Boeing here on a longer term high base. My other favorite sector is financials. Last week we were long MTG. It's a mortgage company, and you can see here it worked out very nicely. It was up almost 2%. These candles are beautiful. Whenever you have a big move up and then you get this little tiny move down, It's telling you there's still people there that want to buy it. It just is a little tired. So I still think this one has some legs to it. This week, JP Morgan. I know this is a really boring trade. JP Morgan is about the most boring thing out there. But really, when I look through all the financial sector, I really came down to two stocks here. I liked Berkshire Hathaway and I liked JP Morgan. And now I'm going to be looking to play this kind of similar to what I'm doing with Boeing, where we have a base. And there's been a couple times where it's broken out and failed. Broken out, failed, broken out, and failed. So I'm going to do the same thing here with the diagonal 1 week, where I'm going to open up the trade, sell that diagonal at 142. Now look, if this thing takes off and runs this week, you know what? I'm not going to participate in the upside potential. I'm selling off that upside potential, but I'm also reducing my cost on the whole thing. If we just don't break out and hold, I'm going to dump the whole trade for a small break even, small gain, break even, small loss, whatever it is, and I'll move on to the next one. If we break out above and we hold around that 142, I want to be long these calls unhedged and just let it run, especially with the Fed meeting out of the way. I think it would look very good on the bull side.
Consumer, last week we were long Lennar Homes, LEN. And this one did really nice for us as well. This was up about 2%, had that breakout, a little bit of a pullback, to Tuesday's low right there, but, it still looks good. So if you've got time left in this trade, I would say it confirmed, a 2-day bull. I don't like to call a bull pullback for 2 days, but that's really what it looked like on Wednesday, Thursday. It said your confirmation it was over on Friday. So, holding this one, I think, the near term 115 looks pretty good. You can do that in a week quite easily. So this one's looking pretty good for us right now. Looking right now is TJ Maxx. You'll say sideways or a high base. And this is another one you can see it's been basing since April. Not as big of a run as Boeing had previously to it, but you got April, May, part of June, so 2.5 month base right there. It looks like we broke out here on Friday. Stuff like this, I think you have to call it, Rob. You got to do that diagonal right there. You've got the monthly options that are very, very liquid. You've got 1 week left on them to go. And then you could go out to July. You make it a 5-week trade. If it doesn't work out for you, dump the whole thing and move on to the next. But, this one looks like, if you want to sell those 80s against it, you're asking it to move, 60 cents in 1 week. I think it's entirely reasonable right there. And again, this is one of the ones that if it breaks, through and, it hits 81, 82 this week, I'll just take the small gain. I'm not going to chase it though. This is not one that I would want to chase. The technology, last week we were long Shopify, and this really did nice for us. It was up about 5.25% for us. So this one did pretty well. If you shorted those 62s against whatever your position was, then I think you came out really good, really close to a max gain. If you got the long calls right now, I think I would hold on to them. Again, one of those 2-day bull pullbacks. Doji on Doji on Thursday. Friday looked pretty good. I would hold this for another week. I would not have a problem with that. Looking at Texas Instruments right now, TXN, and we're going to play this one sideways to bearish. We've been good on the long side. This is one of the ones that hasn't participated. It broke down earlier than a lot of other things. This has been weeks since the last week of May. So what I'm probably going to do, I'm going to play this one fairly conservatively and just do that 165, 172 bear call spread. Right now, there's a little bit of delta in that one right there, but it looks good to me. I'm going to pull a little bit of theta out of it, but this one is delta dependent. I think if this gets momentum to the downside, it blows through something on a targeted butterfly. So I'm happy to just play this one straight up bear call spread.
And Darren, I like that trade as well, because I think if we do get that pullback this week, if the Fed does disappoint, tech and comm services are likely going to be the ones that get hit the hardest since they've had the biggest runs. So I think having a bear open in technology that's giving you a little bit of upside there. It makes some sense, especially since we've done so well in technology recently. All right, let's jump into materials. Materials, Darren, you were at a 0. I'm at a 0. Last week we had FCX on the short side. You can see it crept a little higher. This trade still has time. It still is looking possible. We're at a small loss at this point. I'm going to let this one work because nothing has been violated as far as technicals go. This week, we're going to kind of stay here on the sideways in both the materials and the energy sector. I know I've been playing especially the energy sector pretty much exclusively sideways for the last couple of months, and it's been paying off really nicely. Until that changes, I'm just going to keep doing that. So here we have Dow Chemicals. We had a little bear rally here off the bottom. We hit into some resistance. I'm not bearish on this. I'm not super bearish, but I think we're going to hang out. I think we're going to hang out in this area. So the way I can do that is throw on that butterfly. So on the butterfly, it's just a question of, okay, where is your midpoint? Now, I went a little bit more bearish with the 50. If you don't want to be that bearish, go to the 51. Play the 48, 51, 54. You get to decide where your midpoint is. I'm going to be a little bit more bearish on this as I'm leaning pretty far bullish on a lot of other trades. But again, you just want to pick where do you think it's going to be on that expiration. I think it's going to be sideways to a little bit lower. And last in energy, last week we had Baker Hughes on a sideways, and if this thing closed, if our butterfly closed this Friday, it would have been a perfect butterfly because we had 30 as our midpoint. As you can see here, we've still got some time left on the trade, so one more week. So we just want it to hang out. We just want it to hang out in this range here, and that's going to be just fine for us. Let's just keep banging the drum here. It's ExxonMobil, not really going anywhere. As you can see, we've got this range here of 102 to 108. Now, I'm going to be a little bit more bearish on this one. So again, this is where I'm going to play a sideways trade, a butterfly, but I'm actually going to add in some delta to this. I think this thing is going to drift lower. I think it's really bad news when there's a cut in production and oil goes down. That's telling me that people aren't liking what's happening in the future as far as oil prices and expectations go. Now, look, 102 is fairly aggressive. If you don't want to be that aggressive, go with 104. Go with 106. Go with, something slightly bearish. As I said, I've been leaning hard on the bull side. I want to reduce that a little bit in my overall portfolio, so I'm adding in a little bit more negative delta this week with some of these butterflies or bear call spreads, just to back myself off of being so bullish going into a Fed meeting. After the Fed meeting, I can reallocate and I can go back to being more bullish, but I'm just dialing things back a little bit here, just using some, mildly bearish strategies in some of the weaker sectors that we've seen.
That's a good point to bring up there, Rob, because I was talking with our mastermind group yesterday, and we went through a trade, and I had a lot of my bears fall off, and I was looking at my portfolio allocation. I said, man, I'm still bullish, but I feel like I'm too bullish. So we had to find a bear in healthcare. Actually, I think we went short Zoetis. And it's one of those things where you have to reevaluate your portfolio at all times, and that's one thing that the mastermind group that we work with is doing really, really well, really good with is taking a look at that portfolio allocation. So I think this is a great trade to put on.
For any of you that have not heard about that group yet, we will be getting out details to everyone as we finalize some things. So to wrap up this week, I'm bullish. I'm still bullish. Yes, the market looks a little tired, but guess what? That's what happens in bull markets. You have these runs, and then it gets tired, and then you have another run. The only thing I can look at that is a risk to this market is this week. I think if we can get through this week, and there's no huge freak out, and people don't have to change their minds on where the economy is going, I think we can continue this bullish run through most of the summer, to be honest with you. This week, I'm a little bit worried. We've got the FOMC, and we've got quad witching. Now, quad witching over the past year or two has become a really volatile week. So I'm just expecting this week to have a lot of volatility. Ultimately, I think we probably end unchanged for the week, but I think we could have a couple +2, -2% days in this week where we are going all over. Now, that can cause some havoc for directional trades that have stops. So I want to be in positions that I can sit through that volatility very comfortably, because I do expect this week to have a couple huge freakouts, both on upsides and downsides. I want to be able to get through this week, and then next week, if the market holds on to the recent gains, I don't see any reason why this bullish market doesn't continue. Well, that is it for us for the Trading Room. Thanks for joining us. Bye, everyone.
Good trading, everyone.